What is going on, guys? Back with another video. Today, this starts a little new series that I want to do, which is my weekly recaps. And basically, I'm just going to be going over any of the trades that I took during the week. And this is going to help me basically kind of analyze the trades I took, if they were smart, if they were dumb, um, things that I can improve on, and just overall holding me accountable for all of the, you know, dumb mistakes that I make. So let's just start with Monday. Was the week of New Year's. So coming coming into the week, I was expecting it to be very slow. There's going to be less volatility, more people are on holidays and vacations, so there's that. So coming into Monday, I took a loss. Let's just basically go over my journal. I'm going to read what I said, and then we're going to go into the actual pictures of the trade I took. So I said targeting the 4 hour low. I basically shorted the opening candle, which I probably shouldn't in the future. It's just too risky. Even though it looked good, as I had a proper break even internal low, it's just way too volatile. Got stopped out and will be on fresh combines. Just need to be consistent, following my rules, and staying disciplined. So this was actually the first time I ever attempted to short the or like trade off the opening candle, and I instantly realized why you shouldn't do that. Um, it's just way too volatile. We had 4 hour lows, which are a prominent low to target, but on the opening candle, you can't really base off any of the previous structure, right? Like going into the market, you should have some structure to base off of and then take your trade. Going into a trade instantly, you're kind of gambling. It's basically a gamble. Even though the setup itself looks good, I entered off the 1 minute. The 1 minute looks worse. On the 30 second, it was a really strong close, and it like still didn't play out. So I mean, there's a basis of that. We can go in some of the higher time frames. That's the 5 minute. Um, what is this? Oh, wrong picture. So yeah, we were kind of inside this 5 minute gap ranging. You could expect that we would just dump. That was what was going on in my mind, but um, I just quickly realized why you don't like trade the opening gap. It's just not. It's not like an efficient way of trading. So yeah, we ended up like targeting some high. I don't really know. Let's see. It's probably just like a London high or session high. But yeah, that's what it looked like on the hourly. And yeah, I basically learned my lesson there of why you shouldn't trade market open. Wait a little bit for some structure to actually form, and then make a decision from there. Don't just jump into a trade like instantly. I also, um, that was like my last $1,000 or 1 R for my combines. Um, and I mean, what was going in my head was I either wanted to basically get my accounts back up or blow the accounts, and I blew the accounts. It is an ROI game. I know I shouldn't be taking losses like that, but it is what it is, and I will never take a trade like that again. Okay, so going into Tuesday, it was a no trade day. I said we just ranged. Um, I mean, yeah, that's basically what the day looked like on the 1 minute. Um, we had some good draws on liquidity, but um, when we're kind of ranging in between those two things, like we just keep bouncing off these levels, even if we're getting somewhat close, like there needs to be clear displacement, clear volume. Everything needs to be super clean because it's very possible that you think you're gonna get in a good trade and then you just get wicked out because like we're ranging. So yeah, that was a pretty obvious day to not take a trade. Locked my account. It's pretty good. And then the 31st. This was a break-even trade, it looks like. Um, Break-even trade in the beginning. I wanted longs to previous day high, but we had a major sell-off and had London lows. We were trending lower. We created a 5-minute gap and respected it heavily. And on the 1 minute, had a strong closure lower with internal low, with internal lows to go break even. When I took that trade, I wanted to see price flush lower as we were just dumping, and the fact that we began to slow down and began wicking, I decided to go break even early to minimize risk. So today that trade, I actually wish I did not take that trade. After being in a call with my mentor, um, just using the eye test, this candle should have been way lower, in order to be more convincing that we were gonna go lower. The fact that we had like this candle up, candle down, and then another candle up, and then I basically short the candle down. It's not even below this previous candle, which is basically showing that we're still like moving higher. We're not invalidating the retrace. Um, I basically got in the trade, entered like I forgot I was on micros, entered 2 micros, then I entered another 15, right? Because that's the $1,500 profit target. And once I saw like these first 5 candles, um, I went break even after we kind of had this lower candle, and then yeah, we kind of just ranged the rest of the day. The trade did end up playing out, but I would never want to be sitting in a trade for that long. And yeah, it's just like you don't want to get caught up in that. The most I would stay in a trade is probably like 30 minutes. So, and that took like an hour. So, I mean, yeah, there's that. Probably shouldn't have taken a trade that day. Um, Probably just psychologically, I want to get my accounts up. That way I can pass and be on a XFA. But that's just something that you have to deal with is like patience. You actually have to wait for a high quality trade. And if you can't do that, then don't trade. So there was that. And then obviously New Year's Day, bank holiday, no trades. And then on Friday, it was another no trade day, said because of negative R and SMT lows. So the first picture here, um, this was to London high, and the trade would have been negative R, right? We do have an internal high that you can go break even at, but I would have liked to see a deeper retrace, and then like a strong candle close higher, um, with a at least a 1-to-1 risk to reward. The fact that this was like a point 0.8 risk to reward, I would never take a negative R trade, um, unless it's like A plus A plus, and in my opinion, this is not A plus. Um, just yeah, like pretty self-explanatory. And then another reason I did not take a trade, we had a SMT lows. Um, so you can see here on ES, we like took out London lows. I do not, maybe just like a 4 hour low or whatever. But we took out the lows on ES before NQ did. Even though there was a trade set up on NQ to take out those lows, ES had already taken them. And in my opinion, it's never safe to take a trade that has been SMT'd. There's been too many times where you just get wicked out or stopped out because you tried taking a trade too low, but it wasn't as prominent as you thought it was because it was already taken on another index. So, I mean, yeah, that's pretty much it. That's about it, guys. Hope you got something out of this video, and um, make sure to like and subscribe if you want to keep up with this journey. Yeah, that's going to wrap it up, and I hope you guys have a good day, and we'll see you all next week.